NIO stock had a strong bounce on Monday, closing up by about 47 cents, or roughly 7%, to finish the session at $7.18 per share. For a stock that has been weighed down by trade war rhetoric, rare earth supply concerns, and negative investor sentiment, this rebound was not only overdue, it was significant. So, what exactly was going on with the stock today? And is this just a short-term relief rally, or could it be the start of something more sustainable? Let's start with the obvious. The single biggest influence on markets today came from the macro level. After weeks of aggressive headlines and escalating rhetoric about tariffs and trade tensions between the U.S. and China, we finally saw a small but meaningful shift in tone. Over the weekend, Donald Trump posted on Truth Social that the United States wants to work with China and avoid a depression. Those words, work with China and avoid a depression, may sound simple, but in market terms, they carry enormous weight. They represent a pause, if not a pivot, from the confrontational tone that has been dominating the conversation in recent weeks. That single post appears to have had a ripple effect across global markets. Investors who had spent the past 2 weeks de-risking their portfolios, selling Chinese tech, semiconductors, and electric vehicle names, suddenly found themselves repositioning for a potential cooling of tensions. Futures in the U.S. turned higher. Asian markets steadied. And Chinese exposed equities, which had been battered, saw some of their sharpest gains in weeks. In that environment, NIO was perfectly positioned to benefit. It's one of the most sentiment-sensitive names in the entire EV sector, highly correlated to China headlines and policy shifts. When the mood improves, NIO tends to respond quickly. Now, while Trump's post might have lit the spark, NIO's rally wasn't just about politics. There were also underlying technical and stock-specific factors that gave this bounce some real substance. For one thing, NIO had already been trading near a key support zone around $6.40 to $6.60. This was the same range that had acted as a floor in previous pullbacks. When the stock held that level again late last week, and then buyers began stepping in on Monday's open, it created the perfect setup for a relief rally. Momentum traders and short covering likely amplified that move, sending the price surging towards $7 and above. Volume is another important part of this story. The rally wasn't just a low-volume drift higher. It came with conviction. That's crucial, because one of the problems with many recent NIO bounces has been their fragility. They've lacked follow-through. Monday's action was different. It showed that when macro headwinds calm even slightly, there's a large pool of sidelined investors willing to re-engage. That's a healthy signal. We should also remember that the underlying fundamentals haven't changed much, and that's actually a good thing. NIO's third-quarter deliveries remain impressive, up 41% year-over-year at 87,071 vehicles. The company continues to expand its battery swap network and fast-charging infrastructure, building on what is arguably its greatest long-term advantage. And while the capital raise announced earlier this month caused some short-term dilution anxiety, it also improved NIO's liquidity position, giving it room to maneuver through a turbulent macro environment. In other words, NIO is still doing what it needs to do: execute operationally, invest in growth, and strengthen its balance sheet. The stock's movements have been driven far more by global fear than by company weakness. So when you combine that solid foundation with a softening geopolitical tone, it's easy to see why Monday's move caught so much attention. Cooling trade tensions don't suddenly fix everything, but they do shift the narrative. They change the emotional landscape in which investors are making decisions. Over the past few weeks, sentiment around China-related stocks had become almost apocalyptic. Many traders were pricing in worst-case scenarios: 100% tariffs, new bans on EV components, and aggressive countermeasures from Beijing. When those fears ease, even slightly, you get violent upside reactions, as we saw today. But let's not ignore the other side of the equation. A one-day rally doesn't erase the structural risks still hanging over this market. Tariff uncertainty hasn't vanished. Supply chain vulnerabilities remain real. And Trump's post, while notable, is still just a social media statement, not an official policy announcement. We've seen his tone shift before. Sometimes conciliatory one day, combative the next. Markets will need confirmation through actions, not just words. That means traders will be watching closely this week for any follow-up from U.S. officials, trade advisors, or Chinese counterparts. If there's no progress, or if the rhetoric hardens again, we could see volatility return quickly. For now, though, Monday's move has given bulls something they haven't had in a while: breathing room. After testing multi-week lows, NIO has reclaimed the $7 mark, a psychologically important level. If the stock can hold above $7 through midweek, it could start to build a case for a short-term trend reversal. A move towards 740 or even 760 would begin to confirm that the worst of the recent panic selling is behind us. But that depends on follow-through. Without continued buying pressure, these kind of bounces can lose steam as quickly as they began. It's also worth considering the broader market context. Chinese EV peers like XPeng and Li Auto also finished higher today, both benefiting from the same macro relief rally. That correlation reinforces the idea that this was a sentiment-driven surge, not a NIO-specific news event. However, NIO's stronger-than-average move, up more than 7% versus smaller gains for peers, hints at something else, possibly the unwind of short positions that had built up heavily in recent weeks. Short interest in NIO had already fallen below 10%, but many traders likely added new positions as trade tensions escalated. When the market flipped, those same traders rushed to cover, fueling an outsized bounce. That's a common pattern in high volatility environments. Fear gives way to relief, and shorts become forced buyers. So, was this largely because of cooling trade war tensions? Yes, that was the main spark. But it was amplified by technical support, strong volume, and short covering. The combination of those elements made today's rally more powerful than it otherwise would have been. The key question now is whether this was just a knee-jerk reaction or the start of a longer recovery phase. To answer that, we need to think in terms of probabilities. If the rhetoric between the US and China continues to cool, even modestly, then we could see a broader rebound across Chinese equities. That would help lift NIO further, perhaps into the mid-$7 range or even the low 8s over the coming weeks. On the other hand, if tensions flare up again or new tariffs are confirmed, this could prove to be a temporary bounce within a larger downtrend. At this stage, the evidence points towards stabilization, but confirmation is still pending. From a trading psychology standpoint, these moments often test conviction. When a stock has been beaten down for weeks, most investors become emotionally fatigued. They sell on fear, then hesitate to re-enter when things turn. The ones who stay calm and analyze the data, not the noise, are the ones who typically capture the early phase of recovery. Monday's bounce might mark that inflection point for NIO. It's too soon to declare victory, but it's the first genuine sign of life after an extended slump. We also need to keep in mind the medium-term narrative. NIO's strategy continues to center on technology differentiation, battery swapping, premium branding, and overseas expansion. None of those pillars have been fundamentally damaged by short-term macro shocks. If anything, a calmer political environment would allow these advantages to shine again. Investors who believe in the long-term EV story may view current levels as an opportunity to accumulate gradually rather than chase spikes. Still, caution is warranted. Volatility remains elevated, and sentiment can turn on a dime. Traders should avoid over-leveraging and focus on confirmation signals, consistent closes above $7, rising average daily volume, and strength in peer names. Those are the clues that separate a real base from a dead cat bounce. For now, though, the message from Monday's session is clear. The market has shown that it's willing to reward even small signs of cooperation between the world's two largest economies. Fear has dominated for weeks, but hope, even tentative hope, can move prices quickly. NIO's 7% gain is a reflection of that emotional reset. The stock didn't just rise because of cooling tensions. It rose because the market remembered that sentiment can swing both ways. If we step back, it's actually a reminder of how markets operate in general. They don't respond to facts alone, they respond to expectations. Over the past month, expectations had become extremely negative. Monday's change in tone, however minor, created a shift in expectations, and prices adjusted accordingly. Whether this marks the start of a broader uptrend will depend on what happens next, both in Washington and in Beijing. As we look to Tuesday's trading, keep an eye on follow-through. If the buying continues into the next session and volume remains strong, that would signal genuine demand returning to the stock. If the move fades quickly, it may have been more of a positioning adjustment than a structural change. Either way, NIO's price action is once again worth watching closely. It's telling us something about where sentiment might be heading, not just for this company, but for the entire Chinese EV sector. In summary, NIO's 7% rebound on Monday was driven primarily by easing trade war fears following Trump's post that the US wants to work with China and avoid a depression. That softening tone sparked a broad risk-on move across Chinese equities, amplified by technical support, short covering, and healthy trading volume. The fundamentals remain strong, the company continues to execute, and sentiment, at least for now, appears to be turning a corner. The key will be whether that tone of cooperation lasts. For long-term investors, today's rally might not be the end of volatility, but it could be the beginning of renewed confidence. And that's your NIO Monday update. We'll keep tracking the headlines, the policy shifts, and the market's reactions as they unfold. For now, NIO is back above $7, and that alone is worth a moment of cautious optimism.